Over the past year, Apple stock down 14%, but year to date, this thing's up over 20%. What is Apple going to have to do over the next 11 months in order to maintain this type of performance? We'll talk about that and more on today's show in context of those Q1 earnings, which came out after the bell for Apple. What is going on, investors? Hopefully, you guys are doing well out there. That time is there. It's probably one of my most favorite earnings. This is the most favorite earnings report that we get to go through, and it is Apple, because as we roll through this, we'll get some comments from Tim Cook and the other executives on the conference call. We'll take a look at the forward revenue estimates, which we don't get a firm read from Apple. They don't tell you, hey, we're expecting this amount, but the CFO actually said something interesting on the conference call. I don't know if everybody heard it or if he misspoke or we're misunderstanding him, but we'll talk about that here in a moment. We'll go through these financials. And look, in a down quarter, okay, where you went from $124 billion worth of revenue last year down to 117, we can make some excuses. There's some manufacturing excuses. There's some currency excuses. Certainly when you look over to Tim Cook, he's going to blame a lot of it on FX as they sell these products across the world, and a strong dollar, which is a headwind for the company. Oh, certainly over the last 12 months. It looks like at some point that turns into a little bit of a tailwind as too. I don't think there's enough discussion of that on Wall Street, so we'll discuss that as well. We'll go through the cash flows or the operating profits. We'll certainly look at cash flows. We'll look at the balance sheet, which obviously when you're looking at Apple, it's just, tremendous from that sense. And then we'll come over here and look at this from a technical perspective. During the regular trade, you were about 3.7%. This one's bounced around to kind of like unchanged to down. I'm seeing right now it's down 3%. Obviously, we'll see the follow through when we go into the Friday trade, but we'll talk about this broadly from a technical perspective as well. Let's talk about those Q1 revenues. Most companies are in kind of a fiscal fourth quarter. This is the first quarter. Apple, decides to make this their first quarter. And look, when you have revenues of this much, $117.15 billion, you pretty much do whatever you want. Now, that was a decline, though, year over year by about 5.5%. And it did miss expectations by a lot. Okay. The expectations, although the expectations were kind of tough to nail down. Okay. Because you had those manufacturing things, you have China reopening, they're closing, they're doing all these different things. And the quarter, it looks like now we're reopening. And so we'll talk about that here in a second. But, you had a range on Wall Street, 30 analysts from 112 up to 129. We're talking about the current quarter. And so they came in at 117. So very much towards the low end of kind of the range that Wall Street had, and definitely underneath expectations. So they definitely under-delivered on that revenue side, but we got some indications on the conference call. The CFO said, quote, they are expecting the March quarter, which is, I believe, the upcoming quarter for Apple, to be, quote, similar to the December quarter, which would mark an acceleration. I believe he's talking about revenue. And so what Apple is maybe seeing in kind of their obviously they have visibility a little bit into Q1 already, is they're seeing some of these sales didn't occur in Q1 because maybe the product wasn't available. Also, Apple was late to ship a couple of products. They just released a press release. I think it was last week or the week before. They shipped a Mac Mini and they shipped the new MacBook Pros with the slightly more improved chip. Those were meant to be kind of fourth quarter products or, appear in calendar fourth quarter for the holiday season. They didn't. And so maybe they're seeing some demand there. Obviously on the iPhone as well, there was some wait times on the iPhone. Some of them stretched out weeks at a time. And so maybe what they're seeing is some of that is going to carry over into the subsequent quarter. Because again, they printed a quarter at 117. And if the CEO is saying that revenue for the March quarter is expected to be similar for the upcoming quarter, well, Wall Street was expecting 97. So if you can come kind of at 117, even at like 109, 110, that would more than make up for the miss that you did this quarter and would definitely reaccelerate. So we'll see if the upcoming quarter is going to be that good for Apple, but they certainly have some visibility. They already have 30 days view into this quarter. And so we'll see if that materializes. Certainly if it does, these estimates will continue to walk up. The $97 billion estimate now in 3 months when the company reports their earnings will be considerable higher, and we'll certainly see how that impacts the stock over that time. Let's focus though on the Q4, a deceleration of revenue from 124 down to 117. You also see a deceleration of that service revenue, which was just rapidly growing over the last couple of years. At some point, it's got to flatten out, right? From 19.5 down, up, still up, but the growth rate is starting to shrink to $20.7, nearly $20.8 billion. Now, the thing we love about the service, the reason why, you had $96 billion worth of product sales. Now, still a massively high margin business, certainly from a manufacturing perspective. $60.7 billion in cost gets you this $96 billion in revenue. But the service business is where just these juicy margins are. You had $6 billion in costs to make that 20.7. Again, just up kind of fractionally year over year. So strong margins there, again, fueled primarily by those products. So as long as Apple continues to get those products in the hands of customers, well, these juicy service margins and that revenue should obviously keep reoccurring. With the decline in net sales, your total cost of sales actually declined as well year over year, from $69 billion down to, we'll call that $67 billion. Your gross profit is going to decline as well, from $54 billion down to $50 billion. I mean, we're kind of brushing over some gigantic numbers here. $117 billion worth of revenue in a quarter, and $50 billion of it flows down to the gross profit side. And then when you come over here to the operating side of the business, when you have operating expenses, R&D, and your marketing, I mean, it's almost nothing. I mean, I don't want to call $14.3 billion nothing, but off of $50.3 billion worth of gross profit to spend 7.7 on R&D. Okay, that's up year over year from 6.3 to 7. We've seen this just every quarter, up $1 billion, up $1 billion, up $1 billion. I gotta believe they're working on something at Apple. Whether or not it materializes into something good, I don't know. But I look at these phones and there's a better camera, and that's about it. So I can't believe that they're spending $1 billion more every quarter on these phones. I just don't see that. So they've got to be working on something, whether it's a car, whether it's an AR, VR headset, whether it's something else that we don't really know about. They're doing something over at Apple, or they're just blowing a lot of money and just barely incrementing the products. We'll see what happens. But selling, general, administrative stayed flat. I tell you what, when your revenues slide and they go down, to keep these flat is good from a shareholder perspective. $50 billion worth of gross profit, $14.3 billion in operating costs gave you operating income of $36 billion in a quarter. Not a year, not in 100 years, in a quarter. $36 billion worth of operating income last year. It was a lot higher, obviously, on higher revenues, higher profits at 41. You pull down to net income, you get about $30 billion worth of net income. Last year, it was 34. When you look at the EPS, I wouldn't really analyze this company from an EPS side, because as we get down to cash flows, you're going to see basically all of the net income that this company makes in a quarter, it all goes to buying the stock. Now, when you look at the different segments, the America segment essentially flat, Europe down a little bit, Greater China, we would expect as this country reopens, and we hope that, everybody's doing well in China. Well, look, not a bad quarter considering all the things that have been going on over in China over this quarter. Again, this was last year during the last 3 months. And so we're kind of looking backwards. We obviously know looking forward with that company, things look a little bit different. I think I said company, we're talking about a country of China. Now, in terms of Japan, also down a little bit. The rest of APAC also down. I mean, you're just seeing across all the regions, everything's down. Now, the more interesting thing though is your categories at Apple. And what I was really curious about, look, we knew the iPhone was probably going to struggle a little bit with the lead times and the problems delivering the products. We knew that was going to struggle. I was wondering about Macintosh. We obviously looked at Intel's earnings. We've looked at other PC makers privately myself, but the PC shipment, and Microsoft also showed a lot of weakness in their shipments of OEM Windows, just showing there's a ton of weakness there. We're seeing with Apple, though, they're not immune to it either. They went from $10.8 billion down to 7.7. The company might tell you some of it has to do with the Mac Mini didn't ship in the quarter. The new MacBook Pros didn't ship in the quarter. But other than the Mac Mini, you're talking about incremental changes there. And so I don't necessarily think that would have changed anything. Maybe it would have spurred a little bit of sales growth, but it wouldn't have spun it positive. So we're definitely seeing weakness there because, look, the machines decisions that they make. I bought a MacBook Pro, I think at the end of last year. And look, I have no reason to upgrade this thing, even though the new one is a little bit better. This computer is fantastic. And so I'm probably not going to upgrade, knock on wood, for at least another year. And we're seeing it with the phones as well. People probably making that decision. The iPad, though, look at iPad. Okay, so you actually saw strength there from 7.3 up to 9.4. So that's going to be the challenge with Apple, how they're going to get you to refresh your devices. Maybe you're not doing them every year. Maybe it's something like the iPad where you're doing it every 3, 4, 5 years, and we're just on a refresh cycle there. And the wearables, we actually saw that start flattening out as well. I don't think there was a lot of shipment delays in the wearables, so you are seeing a deceleration there. So the company is going to have to make some changes there. And we already went over the services business, so again, is driven largely by the devices, the Apple Cares, the cloud, the Apple One subscription, the TV subscription, all those types of things just kind of all roll into themselves. Now, come over here to the balance sheet. I mean, you got more cash than most countries have. I mean, we're talking about companies. We're talking about countries here. Over $50 billion, a little over $50 billion in cash up here on the current assets. My guess is because this company has a lot of term debt down here at about $99 billion. They've got another $9.7 billion here in short-term debt. My guess is the banks, and maybe from a regulatory perspective, an accounting perspective, you have to include some cash down here in non-current assets. Most company, in fact, every company I've ever looked at, all their cash is up here in the top two lines. Okay. With Apple, it's a little bit different. Okay. They've got this other marketable security line here, which is essentially cash as well. That's at 114, down a little bit year over year, but you've got a mountain of cash. I mean, you've got like whatever, 160, $170 billion in cash. It doesn't really matter when you have this much. The other thing that I noticed is inventory has ticked up from 5 billion. That's not last year. So that's like, kind of a 3-month period of time. So the inventory has ticked up. That could support the CFO's assertion that the revenue for the upcoming quarter is going to be stronger than expected, because the company, it appears to me, has the inventory on hand, because by September, you might not have built up all your inventory for the holiday quarter at Apple, but it's built up probably a little bit more than normal for Apple. And so they certainly could sell through that. That could lead to stronger sales numbers for the subsequent quarter, that they actually have the product to ship over at Apple, which appeared to be some of the problems. Again, FX currency, also another problem. Again, from the liability side, they do have some debt, but when you have this much revenue, this much cash flow, this well-controlled cost structure as well, coming down here to cash flows, you'll see stock-based compensation over the last year, $2.9 billion. Last year was 2.2. So we're not seeing a rapid acceleration in stock-based compensation. Yes, your net income declined from 34 billion down to, we'll call that $30 billion. You get to add back in depreciation, some other things as well. And you get your cash generated by selling phones and services, came in at $34 billion, down quite a bit. I mean, we're talking $12 billion less than it was, a little more than $12 billion than it was a year ago. You're at, we'll call that 47. We're down to $34 billion. But the good thing is with this company, they don't really have to spend their money on a lot, okay? Purchase a property, plant, and equipment, $3.8 billion. I mean, it's accelerated a little bit over last year at $2.8 billion, but not, when you got $34 billion worth of cash flow and you spend $3.8 billion on property, plant, and equipment, it's, pretty much nothing. So you come down here to financing activities. What are you spending $34 billion worth of positive cash flow on? Well, you're not building any property, plant, and equipment. You're not really doing anything, but you're buying back the stock. And I think I misspoke at the lead. I think I said that they bought back $30 billion, which is right at around their net income number. My apologies. It's actually $19 billion. So, it's still clearly an impressive number when you're buying back on $34 billion worth of positive cash flow, $19 billion worth of stock over, we're not talking about a year here. This is a 3-month period of time. You bought back $19 billion in stock. There's not a lot of $19 billion companies. There's not a lot of companies that do $19 billion in revenue. There's certainly not a lot of companies that do $19 billion in profits. We're talking about $19 billion in a buyback in a quarter, and that looks like the pace that this company is on. They're just going to buy back $20 billion worth of the stock. every single quarter like it doesn't matter. And so that's what they're going to do. They get to borrow money at essentially like 0%. I mean, 0%, it's like, like 3, 4, 5% or whatever it is. Well, they're going to kind of move that paper around and borrow money and pay it off. They're going to decrease their cash a little bit year over year, down about $3 billion. But when you have well in excess of $100 billion in cash, a $3 billion decline on that is, like Warren Buffett dropping, a couple $100 on the ground. Nobody's going to notice. This company, very impressive from a cash flow balance sheet perspective. Obviously, sales falling off, but if they're able to somehow magically reaccelerate them over at Apple, that obviously will be beneficial to the company. Now, over the past 24 hours, stock was up during the regular trade, 3.7%, and now it is down almost an equal percentage point in the after hours. We'll see how this flows through into tomorrow. I don't know, look, the trend has been up, and so sometimes people just, on Wall Street on a Friday, just take the week off, and so we'll see what happens. But we did meet, there is this area right here, this green line that we've had marked out here on the channel, and we'll call that at 150, okay? It's plus or minus a couple bucks, but, you had this area of resistance at 150. You really technically needed to get above that and close above this cluster of highs that we made back in kind of really November and December of last year. You would have liked to see this stock get above that to really confirm a breakout above this kind of trend. Look, the stock, like every stock, has been channeling down, but Apple's is a little more shallow. Most stocks, you look at like Tesla over the last, 60 days or so, certainly like other stocks, maybe like Nvidia or something like that, had these steep declines, whereas Apple was a little more sideways than it was down. That trend is absolutely still intact, but more recently we've had this gold trend where the stock has been going down a little bit more steeply. You would have liked to see, again, get above these highs, but still looking pretty good. Clear resistance here at 150. There should be some support down here at 137. If you break below 137, I think that's your buying opportunity. Again, it's your buying opportunity if you believe Apple has something else up their sleeve. It doesn't have to be in the shorter term. We could be looking at 18, 24 months, maybe even as long as 36 months down the road. The company has something up their sleeve from a product perspective that has to move the needle. And it's difficult over at this company, okay? When you have one product category at $65 billion, it generates over nearly $21 billion, and we're talking about in a quarter of services revenue. And then you have a combination of nearly $30 billion of other business. You've got to generate some other product that generates like over $10 billion worth of revenue in a quarter for it to actually mean something to this company. And so the company has consistently proven that it's been able to do that over its long history. We'll see if Tim Cook is able to guide this company into its next phase of growth. Obviously, he inherited a lot of wonderful products from the previous management, but we'll see if he's able to keep introducing new ones. Obviously, he has his hands on a few of these, including the wearables, the headphones. The service revenues is largely attributable to him, but we'll see if he's able to layer on that next piece to Apple. And if you believe there is another piece coming for Apple, whether it's some kind of VR headset, whether it's some kind of self-driving car or something like that, well, obviously the stock will continue to outperform, as over the last 10 years, it's up just 789%. You sure as heck hope the next 10 years looks similar to that. We'll certainly be here to cover it here on the channel. Hopefully you guys have a wonderful day. Make sure you join us tomorrow on Friday when we recap the FANG Stock Recap Show. It'll be interesting to see how these stocks react tomorrow on a Friday trading day. Hopefully you guys have a great day out there. Good luck with your investments.